Bailey. Where are you? BOE Gov Bailey Tuesday. So BOE Gov Bailey is speaking 2:15 on Tuesday afternoon. Now, of course, we're not going to be stuck in anything like the UK FTSE at that point in time, but we may well be in something pound related. We do need to be aware of him. Okay. Good afternoon, ladies and gentlemen, and welcome one and all to today's Markets Now session, where we're breaking down the market analysis and economic impact report for this week. Good afternoon to everybody inside the community and to those of you on the outside in the YouTube world. Hope you're all doing well, team. How was your weekends? Good couple of days away? Good couple of days away from the screens? Hope so. Raining all weekend for us here. It was miserable. Good. Yeah, good to hear. I actually went out for the first time in, God, I couldn't even tell you. It's been a long time. I don't really have a nightlife, if you've noticed. All I do is work. I just fill my time up with working related things. But yeah, I did take the plunge and went out for a night of good company and a few drinks. I tell you what, guys, I certainly had a sore head in the morning. I think the strangest thing for me was that down here, at least, I was like one of the oldest of in the sort of local demographic of people going out. Everybody looked like they were between the ages of sort of 18 and 24. You haven't had a drink this year? My God, man. I actually don't believe that. Good evening, Matthew. Good to see you, buddy. Good job, mate. Good job. I'm impressed. That's right. Yes, I am. Yeah, I'll be 36 years old this year. Incredible, really. Incredible. Surprises even myself. I don't think I'll be doing it again anytime soon, mind you. I'm a big baby now. I can't deal with the morning after. I think the thing that gets to me worse than the drink is the sleep. I didn't get to sleep until about 2:30, and I tell you, I was absolutely knackered. I felt rotten the next morning. Yeah, there's no Wolf of Wall Street here anymore. I'm years ahead of my age. Right. Anyway, enough of that. Let's see what's going on this week. So, we'll start from the top. We'll work our way down. I will just give you a little bit of an insight though, as there's not a great deal to look ahead to this week in terms of economic catalysts, unfortunately, team. I did mention this last week on the Friday flashback session in the morning that we did on Friday. It was a little bit disappointing. I thought there was a couple of major market drivers this week, but as it happens, there's not. We will get onto that in a moment though. So, starting from the top then, NAS 100. We last week saw one of the tightest ranges we have really seen in these US indices for a long time. The trading range was very choppy. It was very stable, very quiet. Nothing happened. And this week, I do feel that we are in the runnings up for a breakout of the structural point and then to get that continuation long as per the chart photo in there. But I wouldn't take this as a longer term trade. This is obviously to look at sort of a longer term bias for our day trading that we carry out on a daily basis. But looking at where the last 48 hours of active trading hours were last week, the market did not make any lower lows, and it was remaining stable but at the top side of the range, which generally when we see this means that the orders are building for that breakout. So my anticipation here is to see that breakout on the 4-hour time frame and go up and away from there. Now, we need a break close and a retest. In order to even day trade this thing long, we need a 15-minute breakout retest at a minimum, and then we'll be looked to take the market up to, previous intraday highs, which will be about there, I imagine, in that level, which coincides nicely with the retest of this area and goes right the way back in time. Rest assured, we will check that out. I already did when developing the report this morning. It's a good level. It's a strong level. So that's what I'd be anticipating. If we don't get the breakout in the retest, however, we will see very much the same thing this week, and we just won't see much movement from it. Now, moving across to the FX space, we are looking at the USD versus the Japanese yen this week. Markets are consolidating. We're looking at a tight band of descending highs, lower highs being formed, but the same lows, so a little bit of a falling wedge. We do have opportunity for this to trade long this week, which I've outlined there. But if we do somehow break through the floor on the UJ, then we're going to have to completely rethink our plan and reevaluate the situation. But I believe we either have the intraday opportunity to short it from where we're currently trading right now, which is one thought process, or the alternative is we actually get the break of structure of the previous intraday high, and then that will take us back up to, so I'm talking about this area in here. I know it's small, but we'll jump onto these charts and have a look at them closely in a moment. We get the breaker structure above this high, and then we can take it back up to this level, which is a really solid trading margin. It's got good strong availability in that one, so not looking too bad. Moving down, this week I decided to swap out natural gas for UK Brent. UK Brent at the moment, very, very tight little range that we saw last week. Didn't really see much of anything initially past the Monday. Monday was a big day for UK Brent, but then the rest of the week was very, very stable. So looking at a breaker structure from the highs, and then we may be able to start looking at longer term positions in that one as well. It's got great upside potential. It really does. Fantastic available margins to trade. A really solid risk reward ratio as well if we get the timing right. And sometimes this can be frustrating and be an overnight triggerer. So we just need to be aware of that and possibly look at setting up some overnight pending orders just in case. They can be problematic for us. I appreciate that. But it might just we might just have to do what we've got to do to be able to get in at the level that we want. And then finally, on the fourth opportunity, we are looking at gold again. We've got a really lovely break close and a retest, which is actually already something that we were looking at last week. We've got a really nice descending level coming up through the lows as well. It's the polar opposite of the USD yen, if you noticed. And this is a rising wedge. But the great thing about this one is not only did we have the rising wedge pattern complete, we've got the break close retest already taken place. So we're looking at this now being almost ready to get going for us immediately, which is, again, something that we were looking at last week as well. A lot of these trading opportunities actually did fall in from last week's analysis because, well, honestly, the markets didn't really do much last week apart from build up for the next leg. So I'm hoping that this week is going to be the week where we see those trigger points take place. But, of course, as always, in these markets at the moment, especially over the last few weeks, things have been very difficult. So I'm not holding my breath. And I don't think anybody in this room or on YouTube should be right now either. Now, moving down into the market challenges, we've got, in terms of the direct market challenges to our trading assets this week, European CPI and core CPI, which is out, I want to say Wednesday morning at 10 a.m. I will confirm that. I believe it's 10 a.m. on Wednesday morning for European CPI. Bear in mind here, guys, okay? It looks like a really nice big long bar there in terms of market volatility. The biggest amount of volatility that the algorithm's given us this week is a 4 out of 10. That's the main market driver this week. So we've got ECB Lagarde speaking as well, and she's registering as a 2 out of 10. I already know what she's going to be speaking about, and it's honestly not really going to drive any kind of trading volume at all. So yeah, that's a 2 out of 10 for her. But the algorithm punched out the numbers at 3 and a 4 out of 10 for CPI and core CPI, and that's what we've got to be. That's what we've got to be thinking about. That's what we've got to be aware of when it comes to our trading portfolios this week. Now, the SSV is looking more stable than ever before. We have 3 50 out of 100s, 3 50%ers, 1 51%er in the UJ, and the VIX trading at 46.73%. So as I said, there's not much. There's not much to really comment on here. It's just very, very stable. Yeah, yeah, I know. It's well, we've just got to muscle through it. We've just got to muscle through it, guys. Look, we're all together in this, so we just got to band together and get through it. Waiting for some more fun to start kicking into our markets. So down into the economic and order book report this week, the only addition to the broad market impact scale over and above the market challenges is the introduction of BOE Gov Bailey speaking. And Bailey's going to be speaking. I can't remember off the top of my head. I think he's on Tuesday or Wednesday. Bailey. Where are you? BOE Gov Bailey Tuesday. So BOE Gov Bailey is speaking 2:15 on Tuesday afternoon. Now, of course, we're not going to be stuck in anything like the UK FTSE at that point in time, but we may well be in something pound related. We do need to be aware of him. Okay, we definitely do. Now, he's only coming out at an almighty 4 out of 10 as well, same as the core CPI. So we're not going to be expecting any sort of major fireworks from his speech. But make no mistake, the man can shape market narrative for the UK markets. So do be prepared for some kind of potential spike in any British trading assets, including the pound, of course. And then after that, we've got European core and base CPIs at 3 and a 4 out of 10, with Lagarde tying it all up with a 2. And yeah, that's about it. That's about it for market volatility this week, folks. That's caused directly from economic drivers. The impact gauge is suggesting that the FX space is taking even more of the heat this week with everything. So this isn't just the news that is actually managed to make it through the algorithm. This is all data. This is all news this week. And the FX market is at the forefront, taking the brunt of all of that heat from everything that's going on this week. So that's actually a bad thing. Okay, don't look at that 60% and think, well, actually, that's going to cause a lot of market opportunities. What that really entails is the fact of whipsawing and sideways motion, because there's so much news coming out this week that may shape the markets a tiny little bit. Nothing that's earth-shatteringly big, but this is like small, mundane news events that might, even if a market begins to show promise, there's probably something in there that's going to turn it around on its head. So yeah, not a good sign for us. And then in terms of total commercial and non-commercial longs and shorts, the only one that's an outlier is the bond markets. Fixed income markets are 54% long at the moment over a 46% short. That's kind of teetering on the side of opportunity. But the downside to fixed income markets is I don't think many of you guys trade them, even the CFD backed ones at the moment. I know that the fixed income markets are similar to the stocks. It's something that I thoroughly enjoy, but because of broader interest, I don't really end up doing much work on them. We will be doing some work on the fixed income market because I used fixed income to hedge positioning with my investments. So we will naturally kind of delve into the world of fixed income a little bit because they're a great risk mitigator for risky investing. So yeah, stay tuned for that one. And then moving down into the lower half of the report here, we've got equities in focus this week. We've got CELH, ACLS, FIX, and Iron. And with the spotlight equity of the week with super microcomputers. Now this one's made it into the spotlight one quite a few times now, but honestly, it's just a good one to get. It's just right now in the cycle that we're in. We're in an AI mega cycle. Buying anything up like that is just wise. It's just the right call to make. I could have put in anything in there that deals with semiconductors or any AI infrastructure technology and stuff. It's all just in a bullish market at the moment, so you can't really lose so long as you're looking to hold on to your investments for a short time. Anywhere from a month plus sort of thing. Looking to probably scale out as soon as we see the next big market turn. you got the NAS 100 or something, breaking a low, then you probably know bear market territory is not too far behind, and that's when you start to sell out and rebalance the portfolios and start putting stuff elsewhere. But yeah, not a bad one anyway. I highly recommend checking it out. And then in terms of institutional buying interest by sector, AI infrastructure at the forefront, 2.7 billion over the weekend. Energy infrastructure, second place. Industrials at 1.7, and special consumer discretionary in fourth. I would really not worry about that one at all. But again, this kind of just proves what I just said. It's a good segue, really, from what I just said about the SMCI stock. 2.7 billion straight into AI infrastructure over the weekend. It's a no-brainer, guys. Everyone's buying it up at the moment. It's easy money, easy pickings. Right, so that's that. Now, just super quick, and because I know you guys haven't heard me say it this week, the information provided in this market report is for informational and educational purposes only and should not be considered as financial advice or a recommendation to trade or invest. Trading in the financial market involves significant risk and may not be suitable for all investors. Okay, if you'd like to read the full disclaimer, it is at the copy on every copy of the market report, with an even more robust one and T's and C's and everything on our website. So please feel free to go and check that out. Now, with that done, let's hop over here to the charts and have a look at what's been going on this afternoon with our beloved markets. So, first of all, I want to just quickly cover off that USD yen before we forget. So this is where the UJ is trading currently. Descending level, really nicely outlined there. Great trading margins from this breaker structure point at 153.90 down to the floor at 152.50. Really nice bit of room to maneuver there. And then obviously, if we get the breaker structure of this area, which goes right the way back, we've then got a really beautiful trading margin right the way up to the previous highs, which is the break of structure point for a short from 159. So again, a fantastic area to really consider making some money. There's money-making opportunities all over this UJ at the moment, so we have to be watching this one. It's looking great, which is something. The only reason I put emphasis behind that is because we've all been in the same boat over the last couple of weeks. FX markets have been dead, so it's really nice to see something at least beginning to set us up with an interesting opportunity. Looking up at the UK Brent chart as well, we've got this area in here. I've already taken the liberty of drawing in a target profit. Break a structure at the highs, targeting up there at 73.58. That would be our ideal intraday, intra-week trading opportunity there. Stops down here at around maybe 72.15. You're looking at around a 1 to 3, maybe a 1 to 2.8 to a 1 to 3 on that one. So that's not too bad at all either. And it's already beginning the process, which is great to see. Moving down to gold, we've got the break close retest, of course. Incredible trading margin, quite honestly, all the way back up to 556. Now, make no mistake, team, we will not be looking to hold on to this market all the way back up to 556. The unfortunate reality is that there are still a lot of risks at play and moving parts behind the scenes that could shape the narrative of gold and make it lose another 3 to 5% within the next maybe 6 to 8 trading days. We don't want to be in that market. So we are going to be running with the fundamentals and assistance with the technicals on this one. And when it comes to fundamentals, obviously, you guys have got your finger on the pulse, your finger on the trigger as well with that stuff. But I will be here to support and assist with the fundamental breakdowns as they emerge with that. And yeah, we'll take it from there. But still, you've got to give credit where credit's due. It is actually looking finally really nice. So let's hope that we have the supportive narrative to get us back up to 55.60, which would be really nice. So that's that, ladies and gents. Let's take a dive into our US indices this afternoon then, and get us all set up, hopefully, for a strong start to the. Oh my God. Okay. Well, it could be a strong start to the week. I'm not entirely sure. Hopefully. Possibly. Let's have a look at the NAS 100 first. Oh, yeah, that looks good, doesn't it? Beautiful. And the S&P. That's all last week's noise. There we go. Yeah. Okay. Well, let's start. We got to make our stand somewhere, don't we? We've got the floor down there. We've got a lot of inflow coming into the market around 49.20. That's good to know. We've got the ceiling. Same thing applies up here as well. Lots of commercial activity between these 2 points in time. This dates back to 7 p.m. on Thursday, incorporates the whole of Friday's trading. All of that's the prior week. Yeah, not last week, sorry, the week before. All of last week's trading, every single day of last week's trading was spent between these two levels. And this is where we are now after the weekend open. The unfortunate thing about the Dow Jones, we're trading almost at the 50% point between the high and the low. That's not good. Yeah, that's not good at all. That's really a nasty place to be for fresh trading ideas. So what I would be looking at is this area in here for the long entry, and subsequent short entries would be taken about there, which is more pessimistic an entry than, or more conservative, let's say, than the long, but that is naturally just the most decent point for a break of structure based on what the market does thereafter. So we've broken down the entry points. We approximately know where the stop losses are going to be. Now we need to plan the best course of action. So of course, if the market comes up first and then dives back down, you will be taking the short between this area in here and having a target profit down at the lows. You will be looking for a stop loss to try and get as above as many of these points as possible. So we're 1 to 3 there. I would be much more comfortable, even though it doesn't look as nice. It doesn't excite us as much. The 1 to 2.6 is going to be have a much more successful outcome, let's say, than anything less. So 1 to 2.26 it is. That's what we'd be going for. In terms of the long, it is going to immediately look better. We come down here, we come back up, and then the long would be taken at this point in time, with which the target profit would be, of course, at the highs of the ceiling at 49,685. And then I wouldn't be looking to try and beat, this one here. This is a big market open sort of crazy volatility candle. The one I would be trying to incorporate within the stop loss would be this low here, which also includes this low here. So then I would bring my stop loss down to about there and yield a 1 to 2.7. The net return on something like that, you're going to be looking close to a 0.7 trade, which is great. That's what we want. So that would be your long. Now, make no mistake, these are intraday trades, okay? These really are. These are quite sizable moves that we're discussing here. I mean, if you looked at a 1-minute chart and you looked at the size of the scale of these trades, this is not something that's done quickly. But on the occasional market opens that we get, it can be. Like this area in here, for example, this was at 3 o'clock in the afternoon. We got the entirety of this trading margin completed within that space of time. I know for a fact that me and Scotty D, amongst other people as well, no doubt, profited from that trade idea last week as well. So we will be ultimately looking to repeat the process. It was a really nice trade, FYI. So that's what we're going to be looking at this afternoon, team. Now, in terms of the NAS 100, we have very much the same trading context. The market state structure at the moment, ranging, quiet, very stable. I mean, it's choppy, don't get me wrong, but stability in terms of we're failing to make any significant progress in either direction. The problem with the NAS 100 is we have two bases. We have the base here at around 2470, but we also have one lower down at 2450. Then we have one singular ceiling, which is at 25,035. It's imbalanced. If we look at the S&P 500, very much the same thing, one ceiling, two bases. So this makes trading opportunities within these assets a little bit more complex. The best thing that we can do is try to find the cleanest trading margin, the one that has the best path of least resistance. Based on the most recent price action, I believe that is going to be this one in here. So trading opportunities in the NAS will be taking place between 25.020 and 24.725 today. Break of structure for the short. It's certainly not perfect, but I'd be aiming for about this for a short break of structure. And for the long, I'd be bringing this one down and setting myself up about there. Again, very similar to the Dow Jones in terms of the process and the somewhat, to be honest, even the points of liquidity are relatively similar. And we're just going to be rinsing, repeating Friday's process yet again. So shorting down there. Stop losses on this one, not going to be as gracious as the US 30 Dow Jones, unfortunately, but I would be having my stop about there for a 1 to 2.6. The long would be taken down from here. We'd be looking for the target profit there, the base of the ceiling. And the stop loss for this one would be from this low. Try to incorporate these as well if you can. So let's just bring that stop loss down there to 1 to 2.6. And that incorporates the majority. Not every single one. We're not trying to be perfect. We're trying to mitigate as much as possible while still being able to look at a fantastic return on our investment. So we got a 1 to 2.6 and a 1 to 2.6 as it happens on the NAS 100 today. And that would be the plan of action for that. I am going to quickly check natural gas just because. Still trading within liquidity at the moment. Still not seeing the demand come back into this one. It's going to look very interesting very soon, that's for sure. Because if we get a breakdown below this floor, we're going to be trading in areas that we haven't seen for a while. Yeah. Oh, sorry. Actually, no, sorry. We're not at the floor yet, are we? That's that area down there. That's what I was talking about. Yeah, because then it would be down to these areas. So a breakdown below here. That's not really going to be too much of a big deal. The sizable deal out of a break of structure of this area is because it's the base before this move up that we had that was extremely powerful. So yeah, nothing to be said about that one at this stage, though. Patience will persist. Right, ladies and gents, do you have any questions? It is the question and answer time. Any questions at all about what we've done here today, or what you would like some additional information on? Anything at all? All good, D? Yeah, good man. It's a pretty straightforward traded day today, guys. I mean, in terms of the analysis in the trading opportunities and stuff, the margins of availability, it's pretty straightforward stuff. I mean, the markets have been in such a tight range over the course of the last week and a half. It's difficult to. It's difficult. It's not difficult in a nutshell. It's just not difficult to work out, what the margins are and what the trading opportunities are going to be. Let's just hope we get some direction. Well said, D. Yeah, well said indeed. I would second or third that even. Absolutely. Let's hope this week's the week. All good, H&C. Glad to hear it, buddy. All good, Scotty D. Yep, good man. All right then, team. Well, listen, I'll wrap things up there then. It's been a pleasure, as always, having you all on board and being able to dig into this together. As D has so rightly said, let's hope we get some direction and get some volume through. It is a Monday, so even at the top of the spectrum of decent trading conditions, Mondays generally aren't it. So do be patient. Do be patient. Let's just see how we go, and also not rush to think that it's going to be too crap, because sometimes the first hour of the session can be a bit of a dry spell, and then you get into the good stuff in about an hour in. So there is that as well to consider. But I'll leave it there, guys. Listen, have a great one. Thanks for everybody out there on YouTube who's joined in today as well. Remember, you can join us inside the trading community at any time. Please feel free to do so. No strings attached. And have a great trading session this afternoon. So take care, guys. Good luck, and I'll see you then. Thanks a lot. Bye-bye.